Good afternoon, everyone, and welcome to the JobKeeper 2.0 webinar. My name is Alex Alexandru, and I'm the General Manager here at Reckon. I wanted to start by saying welcome and thank you for taking time out of your busy schedules to join this webinar. Today's special webinar runs for an hour and will bring you up to speed on all things JobKeeper, including a review so far of JobKeeper 1.0 and everything you need to know about JobKeeper 2.0. At Reckon, our focus is really on empowering small businesses, and that's not just about the software, but also about education. So I'm very excited to introduce today's speaker. Our presenter today is one of the industry's leaders, Clayton Oates from QA Business. We're thrilled to work with wonderful partners like Clayton Oates to bring you that quality education. Clayton is a Reckon accredited partner and is a passionate and engaging communicator who speaks all around Australia and internationally when we can travel, in a practical based style on his 30 years plus experience around accounting and small businesses. I'll now hand you over to Clayton for today's presentation. Thank you.
Oh, thanks so much, Alex, and welcome everybody to JobKeeper 2.0, what we need to know and what we know so far as well. So we've got a lot to get through today, so let's get started. Why have we put this webinar on in the first place? Well, really it was around trying to gain some clarity. A lot of clients, there's been a lot of confusion from small businesses, even some of it advisors, and around the complexity or how do I actually qualify for JobKeeper in the first place, and what does JobKeeper 2.0 mean to my business and my team. So we want to have some simple and effective instructions, help you get up to speed on JobKeeper 2.0, look at the key components of what we know about so far, how we can utilize your software to review your eligibility to continue on in JobKeeper, what to watch out for, what we know so far. JobKeeper has been going since the end of March, so a lot's happened in that time. And we've learned a lot as well as to some of the pitfalls and some of the tips and tricks, if you like, to actually keep on top of it. So it's going to be relevant. It's going to be very practical, this session. It'll be based on experience and knowledge, what we've gained throughout the last several months, and interpreting the new announcements in the last week as well regarding JobKeeper 2.0. But it's not the end. This is sort of the start or the progression or the extension of learning around all this. There's a lot more resources available. We'll point you in that direction as well and point you towards references that might be more relevant for you and your business to deep dive into with your advisor. The agenda for today is really helping you, we'll do an overview of JobKeeper 1.0, what we've discovered so far, some of the pitfalls or some of the myths to be busted as well along the way. JobKeeper 1.0 then had a review, and that review has been conducted by Treasury, but we'll also do our own review as well together with you today as to where we're at with JobKeeper 1.0 for those that are already in the program. JobKeeper 2.0, what we need to know, we're going to focus heavily on that. Who qualifies for JobKeeper 2.0, how you can work out now, right now, if you're still able to continue and be eligible for JobKeeper 2.0. We'll look at a case study using software, and we'll use Reckon software to help determine your eligibility. There's new subsidy rates that are being announced, so we'll look at those in detail as well. As I said, bust some of those myths that have been built up over the last several months as well. Question and answers all the way through here that we've come up with over the last 4 or 5 months. There's also then additional help available. You know, at the end of the webinar today, there'll be a survey, so you can actually fill that out. If you're looking for more information from us, then please indicate that. If you want a copy of these slides today, simply tick a box at the end and we'll send them out to you as well. But also, how do you now take this information and actually discern it and distill it relevant to your information, your business? First of all, how are you holding up? You know, it's a question I suppose we talk a lot to small businesses every day. And, you know, there's varying sort of responses to that. Some businesses have been able to sort of, in some strange way, benefit from the situation they're currently in. But for the majority, it's a really, really tough time. And obviously in certain states, it's tougher than others right at the moment. We are ultimately all in this together. You know, and you know, when I look at it, sort of coming from the sort of the accounting background, software consulting, working with software companies like Reckon, partnering together and helping small business, these tough and challenging times have brought us together, and we want to continue to do that throughout. So what can we do? Perhaps check in on others, check in on yourself, cut yourself some slack, be kind and understanding. I suppose I had to learn this as well as anyone. Engaging your support team, external and internal. We probably see ourselves today as part of your external support team outside of your business. But we are part of your team to help you get through this and bring information that's simple. Keep it simple, but also clear as well as to how this works for you and your business. Communicate. Keep these lines of communication open. I suppose some of the businesses we see that are managing this time as well as they can are always communicating. They're always sharing. They're actually keeping in touch with their employers, their suppliers, the customers, other business owners, because we will get through this. We just don't know when, and we've had some false starts, and we may have more of them, but each and every day is closer to getting through the other side of this situation that we all find ourselves in. Ultimately, it's about us controlling what we can control. And interestingly, probably the main thing we can control is our thinking, our attitude, our responses to situations, as hard as that is to sort of understand sometimes. Taking responsibility and considered action. So really, today's session is about giving you information and knowledge that you can then consider for your own business and take action. Look, it is okay to feel out of control, and we've all felt that at different times, but please don't feel helpless. There are people that can help us through this, Beyond Blue, Lifeline, and others. Head to Health website that the government's put together around COVID-19 is a useful place to start as well. So if you need to reach out, please do that. Sarge, the fine print, some of the disclaimer here is this session is general in nature. We're covering off on 1,000 businesses today we're talking to. So it's not specific taxation, HR, and investment or financial advice specific to your business. It's general in nature. But however, it's going to raise some questions. It's going to have a lot of answers too. But we would recommend to deep dive into your specific situations, get back in touch with your advisors, your professional advisors, your tax or BAS agent, bookkeeper, or accredited reckon partner who are BAS agents in most cases as well that help you with the software side of things as well. We are a registered BAS agent. We're not your bookkeeper or your accountant, but we are the software consultants. We help make sure the software is set up the way it needs to be in order to be compliant to actually handle the steps and processes that we're going through today. So let's have a look at an overview of JobKeeper 1.0. The majority of you on the call today would probably already be in JobKeeper. Some of you may not, and you might just be working out, can I still enter the program? And there still is provision to do that. But let's have a look at an overview and review where it's up to so far. Now, it was introduced back in March or early April, actually, in response to the coronavirus. So there was this piece of legislation that was pretty much rushed through Parliament. It was what's known as an enabling legislation. So the ATO ultimately was given the role to administer what the legislation was designed to create here, but they needed to create a lot of rules, a lot of directives and guidelines in response to the legislation that was fairly light on, really, as compared to most legislation that's actually created in Parliament. Since then, there's been a JobKeeper review. So Treasury's done this review in July and recommended and now put out to the government has announced that there's going to be a JobKeeper extension. This was announced on the 21st of July. Now, this is still evolving because the legislation hasn't been created yet. So things could change. So it's what we know right now, what we know so far. So we'll certainly let you know more as things evolve. But JobKeeper 1.0, as just an overview there, we needed to be an eligible employer and only eligible employees were eligible for JobKeeper. It started on the 30th of March. It ends on the 27th of September. So that JobKeeper 1.0 is going to end on the 27th of September. 13 fortnights in total. Once you're in the system for JobKeeper 1.0, you're in it for the duration till the end of September. You needed to satisfy a reduction in turnover test, so that shows that you either actually had or expected to have had a decline in turnover. And for most small businesses, that was around 30%. And so if you satisfied that turnover test or expected to, then you were in the system for JobKeeper for the first 13 fortnights. You only had to satisfy that turnover test once, and it's changing now again in JobKeeper 2.0, which we'll talk about a little later on. There was an initial registration. We had to report monthly. We reported some figures that were just really used for gathering statistics for the government to see how the economy is faring based on the numbers that you typed in when you made your JobKeeper claim. We needed to comply with Fair Work changes. There was changes to the Fair Work Act so that those employees on JobKeeper were treated, there was some concessional treatment that sat around that. We needed to pay our employees first. We had to satisfy what's known as the wages condition. So we had to pay the employees, and then we would make the claim to the ATO and receive our JobKeeper subsidy. It wasn't just for employees. There was eligible business participants or EBPs, so that if you're self-employed, you maybe don't have employees. If you're a beneficiary of a trust or a partner in a partnership or a director or shareholder in a private company, then potentially each of those entities could have had one eligible business participant that may not have been an employee that they received the JobKeeper subsidy for. There was definite software setup required, and we've got a lot more detail around that. If you haven't caught our earlier webinars, there's a lot of detail around how do you set up the software, how do you process JobKeeper within your software, and I'll show you how you can access links to that information. We then needed to submit a claim with the ATO, and then we would receive our JobKeeper subsidy early in the month after the month that we're claiming for. We needed to avoid any schemes at all costs. You know, if people are trying to tell you, oh, this is how you can get into JobKeeper, I can help you get into it, you know, work out ways to access JobKeeper. Run a mile if you hear people talking to you about that. You know, the access to JobKeeper will be on the basis of what's actually happened in your business. You don't contrive or create your business in a certain way to receive a government subsidy. And in fact, if you do that, you will be heavily, heavily penalised. The ATO will discover that, and there's massive fines of actually if you're trying to enter JobKeeper when you wouldn't have otherwise been eligible. There was a whole heap of new terminology that we all had to get up to speed on in March and April this year. The notion of this JobKeeper subsidy. What's an eligible employer? Who's eligible employees? What is a JobKeeper fortnight? When do they start and finish? What's this decline in turnover test that we had to actually prove or measure? Now, there's the basic test, the alternative test. We had to project or report on our current GST turnover. What is GST turnover? Who's an eligible business participant? What is a wages condition? And then this claim cycle. So that if you're already in JobKeeper 1.0, and again, our earlier webinars dealt with each of those aspects in a lot of detail, and I'll show you how to access them, then you're probably well aware of all of those new terminology points. Now, JobKeeper 2.0 is what's known as a JobKeeper extension. It's retesting the turnover test based on actual decline in turnover, comparing one quarter this year to the quarter last year, and we'll go into detail around that. It's also introducing this new notion of the 20-hour test, which relates to hours worked on average per week in February 2020. And that's tested once, and we'll look at that and what that means as well. So in order to get up to speed on JobKeeper 1.0, this session isn't going to cover that. We've already prepared webinars around that and run them previously. And this is where you can access them. There's YouTube links, there's additional training on actually setting up the payroll items in your software, understanding Reckon accounts and accounts hosted and Reckon One. But really any software that you're using, you could relate to whatever you see within these webinars. Reckon have created a great resource hub for their software solutions. And we also created this resource page that had a whole heap of other information around JobKeeper and the business cash flow boost. So the purpose of JobKeeper in the first place was actually to keep the connection between employers and employees, where the business effectively goes into hibernation or closes down for up to 6 months. And that's sort of as we knew it, you know, back in April. That was sort of the government's response. It was the biggest economic response ever in Australia. You needed to be a qualifying employer, and you'll receive $1,500 per fortnight for each eligible employee. It's taxable. So you will pay tax on it as an employer who receives the money, depending on your tax situation at the end of the year. And the employee's PAYG withholding is actually paid on this amount. So they don't actually receive the $1,500. They'll probably receive, you know, an amount less than that, subject to the tax taken out. and it goes for 13 fortnights. So once you entered JobKeeper, you're in it. You're in it up until the 27th of September. And you're registered using your MyGov ID usually through your business portal, or you're registered via your tax or BAS agent. So JobKeeper 2.0, what do we know so far? Well, on the 21st of July, the government announced it's extending JobKeeper potentially up until the 28th of March for some employers. And it's targeting to support those businesses and not-for-profits that continue to be significantly impacted by the coronavirus. So from the 28th of September, which is the day after the end of the JobKeeper 1, the eligibility to stay on or go into the JobKeeper extension will be based on actual turnover in the relevant periods, comparing this year to last year. The payment amounts that you will receive will also be stepped down and also paid at two different rates, depending on employee eligibility and hours worked in February. We'll have a look at that in detail. So the business actually, from the 28th of September, in order to continue in JobKeeper 2.0, you will need to reassess your eligibility for the JobKeeper extension with reference to what's known as actual turnover. And so you would need to have, in most cases, small businesses would need to have a 30% reduction in turnover for the June quarter 2020 compared to the June quarter 2019 and the September quarter. So 2 quarters in a row there, June and September, you must be down in order to continue on in JobKeeper 2.0. Now, bear in mind, all of this could change. You know, given what's happening in Victoria and plausibly, you know, New South Wales heading that direction, this could all change. And I'm sure the government at the moment is looking at this. And you know, the Parliament doesn't sit until the 24th of 24th of August. So this could change. But as we know right now, this is what's been announced. They also said, well, we can also continue for another 3 months if you also satisfy the decline in turnover for the December quarter. So you may then remain eligible for another 3 months till the end of March. So what are some of the stats so far, this review that Treasury undertook? Well, they found that around 920,000 businesses, approximately 40% of all businesses in the country, are on JobKeeper. There's 3.5 million individuals that are covered currently under the JobKeeper 1.0 system. It covers 30% of the private sector employment in Australia based on pre-coronavirus levels. In the month of April and May combined, there was $20 billion paid out. Obviously June and July since then, so it's probably another 20 odd billion. It was initially expected to cost 130 billion. But as we know, there was a bit of an administrative muck up with the form. So the 6.5 million employees that were supposed to be covered or thought they were going to be covered from a government point of view, it ended up being around 3.5 or half of that number. So 70 billion overall over the first 13 fortnights of JobKeeper 1.0. On average, each small business or business that registered for JobKeeper had a 37% or expected a 37% decline in turnover based on the April 2020 or compared to the previous year. So the recommendations that came out of this 3-month review was that Treasury recommended that we should continue as a country to continue for another 6 months of JobKeeper, 28th of September through to the 28th of March. There would be reduced payments based on a tiered system and the commitment to have an ongoing turnover reduction test based on actual decline that businesses are experiencing compared to last year. It's estimated to cost another $16.6 billion, which effectively is a 77% reduction over the JobKeeper 1. So plausibly 80% or 4 out of 5 businesses that are currently on JobKeeper, the government sort of expects that they won't be continuing on JobKeeper 2.0 based on those cost estimates. The recipients so far by organisation type and turnover, so you know, around a third of the entities receiving JobKeeper are set up as a company. Another third is individuals, a lot of sole traders in there, obviously. The business turnover, around probably 70% or maybe even more, 80% are businesses with with either no income or up to $2 million turnover. No income might have been that they just haven't lodged the tax return for last year yet, so that could be a little bit misleading. Some of the other numbers is that the number of organisations that have Receive JobKeeper by employment size is interesting. So more than a third, probably 40%, do not have any employees. So you think of the eligible business participants, again, sole traders in there that don't employ anyone. And another sort of 30% really is the 1 to 4 or micro employers. So, you know, probably 70% of businesses, organizations receiving JobKeeper have less than 5 employees. One of the questions from here is, do I have to show that COVID-19 actually caused the decline in turnover of my business? And the answer is no. There doesn't need to be a direct correlation between COVID-19 and coronavirus and your decline in turnover. So it doesn't matter. The reality is that your turnover actually has declined. We're all part of an economy here, so the government had a very broad approach to this. There are ongoing reporting obligations to actually key in your current and projected turnover by month at the moment, but that doesn't affect your eligibility for the JobKeeper 1.0 payment. What if the ATO has stopped paying me the JobKeeper subsidy? What can I do? Well, first of all, effectively, if you're in JobKeeper, you're in it, you know, and it's going to continue till the 27th of September as an employer, as long as you effectively stay in business, even though you may not have any turnover. So you need to first check that your BAS agent or tax agent or yourselves are actually completing the monthly claim. We've had clients that just forgot to complete the claim each month. So have a reminder in your system to actually make that claim in the first week of the month following that you're claiming for. If that's not the case, then not why they've stopped, then you may want to contact the tax office or your BAS or tax agent to follow this up on your behalf. Can I voluntarily stop claiming the JobKeeper subsidy? Sounds strange, doesn't it? But we've had a number of clients that have said, you know what, I'm not claiming it anymore. And effectively, you could stop. You know, JobKeeper is an employer subsidy, which you actually claim as an employer. It's not an employee entitlement. So you could potentially stop or opt out of the system. I'm not sure whether you're going to be able to opt back in, and certainly, you know, so I don't know why you would do this, but some businesses have. They said, look, I no longer need it. I perhaps have an ethical stance that I don't want to receive it. You know, there's those sorts of things that you may want, that some people do consider. If my business turnover drops below $75,000, excluding GST, am I still eligible for JobKeeper? And the answer is yes. If you were eligible originally and you satisfied the criteria to be an eligible employer, then the fact that your turnover reduces, it could reduce to nil, has no bearing on staying in JobKeeper 1.0. In JobKeeper 2.0, the turnover value doesn't really matter as such. It's all about comparing it to the decline in turnover for the same period in the prior year in order to remain eligible. And we'll look at the details there on a quarterly basis. Do I have to be GST registered to claim the JobKeeper subsidy? No, you do not, but you do need to be in business. An ABN number on the 12th of March. There need to be some criteria of having lodged BASs or tax returns in the prior year, but you do not have to be GST registered. So it's I know this GST turnover is talked about. That doesn't mean people that are GST registered. It's just by definition as to what's included in GST turnover, no matter whether you're registered for GST or not. What if I don't have any employees? Can my business still qualify for JobKeeper subsidy? Yes. You know, if you're otherwise eligible, therefore you've satisfied the decline in turnover, then your business may still be eligible for JobKeeper 1.0 and potentially 2.0 by nominating an eligible business participant. So if you're in JobKeeper already and your business has suffered a decline in turnover, there's still you may be in as an eligible business participant, or you may have a chance to already continue or enter still, even though at the case right now we haven't finished JobKeeper 1.0. So we'll talk about that in a moment. Is the business cash flow boost also being extended as a part of this review? The answer is no. So for those of you that you know had pay-as-you-go withholding in March or requirement to withhold, then you would have received a cash flow boost. And it was in a couple of installments, minimum $10,000 the first installment, and the next one is in 2 lots of $5,000 as a minimum, up to $50,000 in each installment. So potentially up to $100,000 by the end of September or after you lodge the September 2020 BAS. That's not going to continue. So the last installment's going to be paid to you after you lodge your September 2020 BAS. If you're currently in JobKeeper, you are still in JobKeeper, at least until the 27th of September, unless you decide to opt out or fail the wages test before then. For JobKeeper 1.0, eligible employers, none of this has changed, except with one small exception at the bottom here. So you need to have been carrying on a business on the 1st of March, or a not-for-profit in Australia, with a decline in turnover, 30% for small businesses, 15% for charities. There's a number of exemptions or exceptions in the charity space. It excludes banks, government agencies, government schools, public and private universities, local councils. A lot of those are, state-based. This is a federal incentive that they weren't handing out to the states to distribute. Any business with a provisional or appointed liquidator were not eligible. And since the 20th of July, childcare providers, if you're in that sector, employers in that area are no longer eligible. So the employer is entitled to JobKeeper so long as they satisfy the scheme on or before the end of a JobKeeper fortnight. They'll receive payment for each eligible employee in that fortnight. The employer must have paid the money to the employee to satisfy what's known as the wages condition, and we need to have notified the ATO of an election to participate in the scheme and satisfied some ongoing reporting obligations, which many of you are already doing, given that you're in the program. It's not too late to check for your eligibility for JobKeeper 1.0. So a lot of people sort of at the end of April and that flurry of activity in April, early May, trying to get JobKeeper sorted, some people, if they didn't opt in then or felt they didn't qualify then, forgot about it. Now, the reality could be that you have satisfied a decline in turnover since then or still expect to up until September. So you may well still be eligible if you're not in the program at this point. So it's worth checking. And so in order to check, basically, this is under what's known as the basic test, it's comparing your projected GST turnover or actual for a period, what's known as the turnover test period, with the current GST turnover for the period that you're reporting on. So you have this sort of, so if right now, for example, you could compare any future month. So sitting here in August, we could sort of look at April, May, June, July, and compare that to the previous year. You can't backdate, so you can determine your eligibility, but you can't sort of then go back and say, I want to claim right back to that start point if you've sort of missed that period when you need to have registered by. But you could still look at July through to September and actually get in there and register if your turnover has decreased or you expect that it will decrease between now and September. This is either on a monthly basis or on a quarterly basis. This test only needed to be satisfied once, and it's not retested under JobKeeper 1.0, but it will be retested under JobKeeper 2.0. There was also a whole series of alternative tests under the first JobKeeper, and we're looking to see these be notified in more detail when the legislation comes out and ATO guidelines. But let's say you had just started a business when JobKeeper came in. You didn't have a comparison period in the prior year. You might have had seasonal factors or adverse conditions like droughts, for example, in the prior year. You might be a sole trader impacted by illness. There was all these other extenuating sort of circumstances, and you could be on the straight up basic test. And there was a lot of guidelines around that. So, even though you failed the basic test, you may be able to qualify under what's known as the alternative test, but do talk to your advisors about that. There was this notion of GST turnover. None of this has changed. None of this has changed for the purposes of JobKeeper 2.0. That's why we're looking at it again here. So this definition of GST turnover, there's the GST Act that specifies what this is, but basically it includes all taxable supplies and all GST-free supplies that you make in your business. It doesn't include what's known as input tax supplies. These are things like interest received, residential rents, dividends, perhaps sale of assets. It also does not include sales not connected with Australia. Don't get this confused with export sales. So if you're just exporting straight out of Australia and from Australia, then that will be included in your turnover figures. But if you're actually running a business made that you're carrying on outside of Australia, you might have sales of goods that have been purchased and sold from a place outside of Australia, or sales of real property outside of Australia. Those amounts are excluded. The decline in overseas operations will not be counted towards the turnover test. And so none of this is changing, as we know, to this date, subject to legislation. So that's staying as is in JobKeeper 2.0. In JobKeeper 1.0, we were allowed to what's known as project. We could sort of project our future income based on a reasonable expectation or a balance of probabilities. So if you sort of projected that, well, based on current scenarios, it looks as though we're going to have a decline in turnover for future months or quarter, then the ATO, you could satisfy your decline in turnover based on an expectation rather than an actual what did happen. Now, the thing to remember here, the ATO actually changed their mind a few times when it came to saying, well, what method or what basis can I use calculate this decline in turnover on? Is it the cash basis or is it on the accruals basis? What if I'm currently registered for GST on accruals? Could I just check my turnover based on cash? Can I, and vice versa? And interestingly, in April, the ATO changed their mind 3 times in 4 days, which made it really challenging for us advisors and to give straight up advice to small business clients. What they're saying now, and they basically settled on this to say, look, if you normally account for your GST on an accruals basis, but you seek to calculate your turnover on a cash basis for the purposes of determining your eligibility for JobKeeper, then they're saying we may seek to understand your circumstances to ensure that the calculation achieves an appropriate reflection of your turnover. So essentially that's sort of saying, well, if you're going to go on a different basis to what your GST basis currently is, then they may well have a look at it and they'll ask you to explain yourself. So, by and large, it's going to be on the same basis that you're lodging your BAS on. If you aren't registered for GST, they're saying we'd expect you to use the same accounting method you use for income tax purposes. So for many of you, small business, you may be actually preparing your tax return on what's known as a cash basis. And that would be the basis for calculating this decline in turnover. Importantly, whichever basis you use, it must be consistent in comparing the month or quarter to the prior year. This was in JobKeeper 1.0, and we'd expect that to be the same when comparing the quarters in 2.0. So JobKeeper 2.0, what is actually new? I know we've covered it sort of in broad sweeps here, and what do we know so far? Well, we do know the subsidy is extended for another 6 months for some eligible employers. We do know that the government expects that to be a greatly reduced number of employers, but given the situation in Victoria and evolving in other parts of the country, that may well change by the time legislation goes through. It'll start on the 28th of September, run through to the 28th of March, sort of in 2 phases, if you like, of 13 additional JobKeeper fortnights in total. There'll be reduced payments and sort of this 2-tier payment. It'll be based on a continual test of your actual decline in turnover. There's a Treasury fact sheet that was released on the 21st of July that's really the only information we've got on all this right at the moment. So we're certainly awaiting further details. Legislation needs to be introduced. ATO guidelines need to be created and documented and published. What are the alternative tests? Is the whole series of those that we can apply again? No new eligible employees will be added except for where you're otherwise eligible. Now there's a bit of an oxymoron, but the reality is, that employee test was based on employees employed in the business on the 1st of March 2020. Long-term casuals that have been in the business for 12 months. This new 20-hour test for employees who worked in February is introduced, and I'll look at that in detail in a moment. You must continue to comply with Fair Work changes. Well, the Fair Work changes hasn't been extended just yet, so that needs to actually be done. Payments to employees first, so you need to pay your employees and satisfy the wages condition. Then you claim the subsidy. Business participation entitlement for self-employed, trusts, partners in partnerships and directors and shareholders, 1 per entity, still remains in place, but is now also subject to this 20-hour test, which could impact the amount that you receive. At this stage, there's no additional software setup required. I say at this stage, there's some interesting points as to how they're going to handle these 2 tiers, so we'll look at that. So there may be some more software setup required. We would submit, claim and receive JobKeeper Subsidy, remaining the same at this stage. Haven't seen any change in that. And again, avoid schemes at all costs. Don't try and contrive to get into JobKeeper 1.0 and sort of, you know, I would highly caution you against trying to move income around. Just trade your business as normal, and the result will be, do I qualify or do I not? Don't start trying to shift things around to suit a result. So in most things, when it comes to sort of announcement by press release and sort of treasury fact sheets, that's not legislation. So the big print giveth, but the fine print often taketh away. So it's important that we know about the fine print. And, you know, the question here is, you know, will there be amending or new legislation introduced? And there does need to be, because the current legislation introduced back in April for JobKeeper under that coronavirus stimulus package ends on the 31st of December. So it can't be extended. So there has to be new legislation or amending or additional legislation created. So the next sitting date for federal parliament is the 24th of August. So we won't probably have a lot more detail until that date or beyond. Will the alternative decline in turnover test be required for some businesses? Will they actually extend those? What are the Fair Work changes? Will they just continue as they already have been in place under this new extension? And what are the ATO interpretations of the legislation? You know, again, the ATO are the interpreters or the implementers of the legislation that's actually been created in Parliament. And what guidelines are they producing so that the frequently asked questions can be answered? We haven't seen that just yet. So JobKeeper 2.0, are you eligible based on what we know so far? So you need to, from the 28th of September, you can no longer project your income just to say, I expect to have a future turnover decline. You can't do that. It's now based on a current versus previous actual by quarter, what's known as a comparative prior year test. It's tested quarterly. So in order to continue in JobKeeper 2.0 or be eligible for JobKeeper 2.0, from the 28th of September through to the 3rd of January, which is that first extension period, we must have a decline in turnover of 30% for most small businesses for the June quarter and the September quarter in 2020 compared to the same quarters last year. Then in order to continue through from the 4th of January to the 28th of March, that sort of second phase of JobKeeper 2.0, you must have a decline in turnover not only for the June quarter and the September quarter, but also for the December quarter 2020 compared to 2019. So the thing here, there's a very tight timeline between the end of the quarters, particularly end of September and end of December, in order to determine your eligibility, because you're going to have to start paying people, you know, pretty quickly, obviously in October, and you'd want to know that if you are paying them, that you are going to be eligible for the JobKeeper Subsidy. So the tip is keep up to date with your bookwork, particularly your turnover, obviously your sales, and you know, tracking your income. That's vital that you stay up to date in order to be able to determine this. So for September through to January, you must satisfy this wages condition also. You must make this minimum payment to employees. But what are you going to get back as a subsidy? So for the first period, the 28th of September to the 3rd of January, the JobKeeper payment rate is now two-tiered. So it's $1,200 per fortnight for eligible employees who, in the first 4 weeks of pay periods before March, i.e. February, were working in the business for more than 20 hours a week on average. And the same applies for eligible business participants. So you need to have been engaged in the business for 20 hours a week on average in the 4 weeks before the 1st of March. If you are not, and so you think of casuals, and this is probably closing that loophole where casuals might have only worked a few hours a week, but they were getting the $1,500 per fortnight JobKeeper payment. It's if they averaged under 20 hours in the month of February for the 4 weeks of February, then the payments will be reduced to $750 per fortnight. And that test is only once, it's for the month of February. Moving forward then through to 4th of January through to the 28th of March, which is sort of the last 6 weeks of the program, we've actually the amounts are going to reduce again. So it's $1,000 per fortnight for those employees that were working more than 20 hours per average week in February, or for those under those hours, $650 per fortnight will be paid to you. So you'll have to keep an eye on what you're paying out each fortnight, JobKeeper fortnight, to these eligible employees, when it comes to working out your top-up amount. So what if I lodge my BAS monthly? Can I compare a single month in the quarter to determine my eligibility for JobKeeper? The answer is no. It's quite clear that the government's looking at this on a quarterly basis. So it requires you to compare actual GST turnover with that of the same quarter in the prior year. There may be alternative tests where you don't have a comparison period, so we're waiting on that from the ATO, or for those of you that lodge your BAS annually, perhaps do your bookwork on an annual basis, there may be some concession around that. JobKeeper 2.0 and the 20-hour test. What am I looking at here? So the Treasury notes talk about all eligible employees who, in the first 4 weeks of pay periods before the 1st of March, are working in the business or not-for-profit for 20 hours or more a week on average. And they're eligible business participants, they're otherwise eligible. And then also the ATO will provide guidance where the employee was paid perhaps not weekly or not fortnightly pay periods in that time. There is commissioner's discretion for some alternative tests, perhaps where the employee was on leave or volunteering during the bushfires, or was perhaps not working the hours that they normally would work. You can apply for the commissioner's discretion on that. So let's have a look at this in our software. So how do we display our hours worked? So if you're using payroll, Reckon Accounts, or Reckon One, let's have a look at how we can see the actual hours work. And I'm going to just jump into Reckon Accounts first of all and have a look at our payroll summary report, just under Reports, Employees, Payroll Summary. And what I've done here is I've just then modified this report to choose the date range of February 2020. And I've turned on the hours column to show me my hours for each employee. And we can see here that we've got Barry and Muriel, Ronnie and Ken, and this is the hours column. So if on average, so if you think of 4 pay periods of weekly pay periods, 80 hours on average or total for the month of Feb, then it's highly likely that we can see that they have qualified. They've worked more than those 80 hours. So you can actually drill into that there. This is just a sort of screenshots for you for those that want to copy the slides. I've just included those screenshots in there as well. So let's also have a look at Reckon One as an example here. And if we move on into Reckon One, what we can do is create a report under our report center. And I'm then just going into the payroll detailed report and choosing the date range. So I've just selected that date range there. And then I can see here that under the quantity column, we can display the number of hours. And we can see that Harvey worked 164 hours in the month of February there. Make sure you get those dates right though, based on the 4 weekly pay periods prior to the 1st of March. So applying the 20-hour test, considering this, getting this information, this test is only done once for hours in February, those 4 weekly pay periods up until prior to the 1st of March. We're looking for a little more clarification around that as to whether it's the pay period end date or the paid date, but it reads as though it's the hours worked, so in those pay weeks. So if the employee works 80 hours in total for 4 weeks and you satisfy the decline in turnover test for both June and September quarter, and you satisfy the wages condition, so you're paying them the minimum amount, then we'll then receive a reduced JobKeeper rate if they worked not more than 20 hours in that average weeks in the month of February. So if the decline turnover test is then passed in December as well, and you've got someone who's worked less than those 20 hours average in Feb weekly, then the rate's going to reduce down to $650 for that second phase of JobKeeper 2.0. So JobKeeper 2.0, this turnover test, it's a one strike and you're out policy. So if we look at our turnover first of all, and how to review your turnover, So first of all, it's important to know that your business turnover does not include the money you get for JobKeeper. So this JobKeeper subsidy that you're getting, it's important that you classify it properly in your books, and probably as other income, so that it doesn't get mixed up and confused with your natural business turnover. It's not a part of that. It's not to be taken into account when working your turnover comparison. Your business cash flow boost money that you received as well, that's not to be included in your turnover calculations. So remember the ATO guideline, or their position on cash or accruals. They'll expect that you use the same GST accounting method that you normally use. So let's have a look at the turnover comparison. We'll use Reckon accounts hosted here as the first case study. So if I jump into Reckon accounts, and I'm simply looking at my profit and loss, under reports, company and financial, profit loss standard. And what I've done, I've just modified this report, and we're sitting here in August. I just want to check last financial quarter, because if your turnover is not down by more than 30% in the June quarter, you're out. It's a one strike and you're out. You don't qualify for JobKeeper 2.0 as it stands at the moment. Again, that could change when legislation goes in, or how do things developed around the country over the next couple of weeks. So we're going to look at last financial quarter. I'm also going to turn on this previous year column and dollar change column, and I'm going to display the column by quarter as well. And so when I run this report, I can see that my total income here, now this is assuming that everything is classified and coded correctly. I'm not counting my JobKeeper subsidy, which is down the bottom here in other income, and my cash flow boost as well. And I can see that I'm down 22% on an accruals basis over that prior quarter, or the same quarter last year. So on face value, this business is not going to qualify for JobKeeper 2.0 in June. And everyone can do this now. You can check out whether your June quarter this year, how it compares to your June quarter last year. And if it's not that 30% or more there, you're not actually, at this stage, not qualifying for JobKeeper 2.0. So that's what we're showing now. Just flicking through those screenshots. How do we get to that? You could look at, don't get confused here and look at the actual whole 6 months, April through to September. This is not what we're talking about here. So it's not a matter of saying, well, overall, I'm down 32% for those 6 months. No, it's quarter by quarter. So even though you might have been down 32% by the time you get to September for the 6 months, it's all based on what that June quarter was and compared to last year. And then if you've qualified then, you check the September quarter as well. In Reckon 1, quite similar. If we look at a profit and loss report, we're going to compare last quarter up to June with the following date range, which is April 2019 through to June 2019. So this is just a profit and loss report. And we can see here that we're down 33%. Okay, so we're still in. We've actually satisfied the decline in turnover for the June quarter. Let's now have a look at the current quarter. So this quarter compared to this quarter last year. And so what we're going to do is actually compare that information through September, and we can see that July through to September, we're also down greater than 30%. So this organisation on face value on the basic test is going to continue on in JobKeeper 2.0. And they're just the screenshots of what we went through there. So what if I have a decline in turnover greater than 30% for the first time in the December quarter? Am I still eligible for JobKeeper 2.0? Unfortunately, right as it stands right at the moment, no, because you didn't satisfy the decline in turnover test for June quarter and the September quarter and the December quarter. If we look then at the wages condition and the reduced rates, that you may require a top up. I suppose here is if people are still working, then you still need to get them up to this minimum payment. And obviously you've got that reduced payments of $1,200 or $750 or based on their hours worked in Feb for this first extension, and then $1,000 and $650 for the people that have worked less hours in Feb for that second half of JobKeeper 2.0. if I pay my employees weekly, can I just pay half of the JobKeeper amount each week? And look, we've had this question all throughout the JobKeeper 1.0. People just said, well, I pay weekly, can't I just pay $750 each week? It adds up to $1,500 then for the fortnight. Well, yes, you potentially could do that. However, the legislation talks about $1,500 per fortnight. So long as you've paid them $1,500, you are satisfying the wages test. But we've had instances where clients could end up overpaying. So let's say in the first week, the employee did not work. And so you've paid them the $750 JobKeeper top up. In the second week, they may work 30 hours. And so they then get paid, let's say $1,000 based on their hours worked. So you've paid them $1,750 instead of $1,500. So you may, as an employer, pay more than you need to if you're doing it that way. So just keep an eye on that as to what that top-up amount would be in that second week. But it's still totally fine to pay weekly, so long as overall the total is $1,500 or more based on hours worked. Nothing's changed here. Only one individual per entity. And for a eligible business participant, and you cannot be an employee, so the business will decide who that is and nominate. That has not changed. Only one JobKeeper payment allowed for that individual. You can't double dip, so you can't be an employee somewhere else or a director of this company. It's just once. You must be actively engaged in the business. You're now subject to the 20-hour rule if you're coming in as an eligible business participant. Not-for-profits don't have this option. The fortnight must be a JobKeeper fortnight. The business must qualify for JobKeeper on or before the end of a fortnight. You must have had an ABN at the 12th of March. So none of that's changed. Just remember, if you're an eligible business participant, the money that the ATO pays your business is paid to the business. It's paid to the entity. Unless you're a sole trader, obviously, it's going to be part of your income. But a partnership or a trust or a proprietary limited company, that money comes in and is part of the business income of the business. It doesn't come paid straight through to you. So as to how you distribute that, that's something to work out with your accountant or your advisor. For self-employed, you must have been carrying on a business. You must have had business assessable income in the 2018-19 tax return, made a taxable supply, so made some sales or GST-free sales in this period, July 18 to 12 March 20. We're not sure if that's being extended for 2.0, but I wouldn't imagine, because you would have had to been otherwise eligible in 1.0 to move through to 2.0 because it's just an extension. Are sole traders subject to the 20-hour average hours worked in 2020? We're probably waiting for a bit more ATO guidance on that. Must have an ABN at the 12th of March. You don't need to be GST registered. So eligible employees, no change here. There was obviously those early changes where you obviously had to be employed on the 1st of March. That still stays. That date has not moved. But we had that anomaly where students were being paid the $1,500 per fortnight, even when they were still at school and maybe working a few hours part-time at the local cinema. So that was stopped at the end of April. So that's no longer the case. For dependent students under the age of 18 are not eligible for JobKeeper. Long-term casuals, that still applies. They need to be with the employer for 12 months in most cases. So that hasn't changed. Reporting for JobKeeper 2.0. We don't really know at this stage what that's going to look like. You would suspect that it's going to be very similar to making a claim at the end of the month, although we've got this notion of two types of people that we're claiming for, two different rates. So JobKeeper 1.0, the fortnights run through to the 27th of September. Just remember, in August, you're going to get paid a subsidy of $4,500 per employee that you'll receive in September once you make your claim. So because that's got 3 JobKeeper fortnights in it. So JobKeeper 2.0 is going to run sort of in 2 phases. So all the way through to the 3rd of January. And it looks like on this that really the month of December, even though it finishes on the 3rd of January, for these 3 fortnights. So there'll be 3 fortnights in the month of December for $4,500. Oh, sorry, not 4.5. $1,200 per person maximum, so $3,600. Or for employees, the $750 per fortnight. So that'd be $2,250 for those employees that work those lesser hours in Feb. And then there's another 6 fortnights after that if you continue to be eligible. Receiving your JobKeeper subsidy. Some people have got confused where to code this. I just thought I'd touch on this before we end today's session. When you're receiving your money from the ATO, and I'm looking at, let's say, the in Reckon accounts here, I'll just double click on the JobKeeper subsidy account here and look at this. We're just receiving or making a deposit. So it's under the banking make deposit screen or on your homepage. We're just simply putting it straight into our bank where we receive the money from the ATO. It's being coded to our JobKeeper Subsidy ATO account, and that was just set up as a other income account. If I scroll right down to the bottom here and I right mouse click on this account that I've actually created, and if we edit that account, we've just created as another income type, and we've called it JobKeeper Subsidy ATO. No BAS code, no GST code. It's not reportable on the BAS. It's not part of your BAS numbers. And we've just banked that money straight into the bank account. I wouldn't go creating items for it because then it can show up. It'll show up in sales reports, as an item sold. It's not what you want to be doing. Just code it as make deposit directly to that account. If we go into Reckon 1, quite similar in the receive money screen, in this money in, receive money, again, down the bottom of the screen here, we've got the account, JobKeeper Subsidy, the date we received it, and the narration, just code it straight into that account. So heading back, just to finish off with, we've got some known unknowns so far. So there are some questions still to be answered in detail. How do you notify the ATO that your business is eligible to continue in JobKeeper 2.0? We haven't seen anything on that just yet. No doubt there'll be more to come out on that. But how do you differentiate the eligible employees? So we've got this two-tiered sort of system now. We've got employees that have worked under the 20 hours average for the month of Feb that will be reimbursed or subsidised at a lower rate. How do we tell the tax office that? We're not sure yet. Is it going to require a new item in the payroll software? Perhaps. Or do we just distinguish this at the time of making the claim? Not sure. Do we need to notify the ATO if we're not continuing in JobKeeper beyond the 27th of September? Do we need to use those JobKeeper-final or JobKeeper-finish-XX fortnight 13 items? Can I start JobKeeper 2.0 if I'm not previously claiming the JobKeeper subsidy? Is that possible? We're not sure yet as to whether that is actually possible, or you need to have been in JobKeeper 1.0 at some stage. What if I don't have a previous June or September or December quarter to compare my actual turnover with? Well, we're looking at the alternative test there, but we need some more details around which alternative tests are being introduced, or the current ones that are in play, are they just being rolled over and extended into JobKeeper 2.0? What if I stopped or missed claiming JobKeeper? Can I then just continue on in JobKeeper 2.0 if I'm otherwise eligible? Plausibly, but again, that's a question that we just want to make sure that if you've stopped or missed it previously, even though you're eligible, and you'd started in JobKeeper 1.0, how does that impact 2.0 if you're otherwise eligible? Is the 20-hour test in February based on hours worked or paid? So what dates? It reads as though it's hours worked in the 4 weekly pays prior to the 1st of March, but maybe we need some more clarification around that. So just to finish off on here, where to from here? I mean, there's a lot of information in here. You've probably got more questions than answers in some instances. Hopefully we've answered a lot, but where do you go for more support? Now, one thing I'd highly recommend is if you, or to partner up or buddy up with a Reckon accredited partner. Someone actually, in most cases, these partners are BAS agents because they need to be to do the sort of work that they do. They're not your tax agent, perhaps in many cases, or they may be. But they're supporting you in your Reckon software. If you don't currently have someone supporting you in that space, seek someone out. If you can't find someone, or we're more than happy to be your Reckon accredited partner. But if you're currently working with someone or worked with someone in the past some time ago, re-engage with them. Get back in touch with them, because there's pieces and nuances in the software that need to be handled right in order to get JobKeeper 1.0 and possibly 2.0 working properly with single touch payroll through to the ATO. So Alex, that's it. There's some information about us here. Feel free to get in touch. Thank you so much for joining us on the webinar today. Stay safe and healthy, everybody, and we look forward to sort of sharing more with you as it comes to light. So have a great day. Thanks very much.
Thank you, Clayton, for your fantastic presentation today. Such valuable and useful information to help businesses of all types navigate JobSeeker 2.0, really. Once again, thank you all for taking time out of your busy schedules to attend and participate today's webinar. As Clayton mentioned, there will be a quick survey pop up at the end of the webinar. So if you could, please fill it in, especially if you want to get a copy of the slides or if you want to get in touch with Clayton and QA Business. We hope you found that today's session valuable, and we look forward to catching up with you at our next webinar. Have a great afternoon, everyone. Thank you.